Hey guys, Daniel Casher here from the Expert Series. This week, we're interviewing Charlie Loveridge, Senior Credit Advisor from Shore Financial. Not only is he a fantastic guy, but he's my personal broker and he's helped out many of my clients in the past. Giving me a big welcome, and we look forward to getting his insight. Thank you.
There are lenders, and the big four banks in particular, that are dealing with so much inquiry from existing clients wanting to discuss pausing repayments and their options because of income being affected by COVID-19. Turnaround times have really blown out. So for a conditional loan approval or a pre-approval with some of the big four banks, you're looking at 3 to 4 weeks to actually get a letter from a bank confirming you're good to go, subject to evaluation, a contract of sale. Saying that, again, another benefit of being with a brokerage with such a big panel of lenders, I can get turnarounds in 24 hours with some institutions. So often, we're getting a client conditionally approved with one lender just to make sure they're, in the mix and able to negotiate and exchange. And then, obviously reassessing all their options if they're successful with the property.
Are you just getting the easiest approval straight away and then worrying about the final approval later on? With the
Absolutely.
Right.
Something to give them the confidence to proceed on the property initially. As part of the service, we always reassess all their options once they've signed a contract and we've got, say, a 6-week settlement deadline. We look at all the banks again anyway. So the turnaround times are an issue, but again, if you're willing to look at other options, perhaps just to give you that initial confidence to proceed on a property, we can turn things around pretty quickly still.
That's excellent. And tell me, John, what are, in your opinion, the 3 key recommendations you can give to people going through the process at the moment of lending?
Yeah. I guess I'll probably be biased here and say use a good broker. It's important, I think, to look at a much larger panel of lenders is important. We obviously, I guess generally, and as you can probably attest, our availability is probably a little bit different to, say, dealing directly with a bank, for example.
Correct.
Like I'm speaking to your clients a lot of the time in the evenings. We have a lot of meetings in the evenings. We work weekends. Just generally, we're available probably a lot more. So using a broker generally makes sense. Things like our support staff. I've got 3 people that work in my team, so we can turn things around very quickly. The volume of lending that we do, as I said, is very large. So it does mean when it comes to turnaround times with the bank, sometimes we are prioritised. In terms of interest rates, a lot of the time the discounts we can negotiate a little bit sharper as well than if the client was to walk directly into a major bank and ask for a home loan. So using a broker, I think, is really important. I think over 60% of home loans being originated at the moment are done through the broking channel, through the third-party channels. So I think that's probably the number one recommendation. I guess reassessing existing approvals, whether you've got an existing approval to purchase a property through a bank or through your broker. As we've said, a lot's changed in terms of credit policy. So, if the approval's coming up for expiry shortly, it's definitely a good thing to, whether it's, through a new broker or your existing broker, through the bank, just speak to them and make sure nothing's changed in terms of their policy. And also if there's been changes to the client's income, whether it's a 20% reduction for a short period, where the bonuses aren't going to be continued and, we won't be able to get a letter from the employer confirming that they would be continued if you were to hit KPIs. That's really, really important, I think, at the moment, whether it's going to allow you to even maybe increase borrowing capacity by reassessing your options. One of the big things that's changed recently is because the RBA has been cutting interest rates and interest rates have been coming down, the assessment rates themselves have come down. So, in theory, they were stress testing borrowers at, say, 7% to 8%. So, yes, you're lending them the money at 2 to 3%, but they're essentially, when looking at the numbers, going, if the client can afford the money or afford the repayments at 7.5%, we'll lend it to them. Because these assessment rates have dropped, we're now seeing clients being stress tested at, say, 5.5% in some instances. So you may find when you reassess your options, your borrowing capacity may have actually increased. If nothing's changed with your income, you're probably going to find you can borrow a little bit more money than you could, a couple of months ago.
So good advice.
Yeah, just having a good little, I guess, reassessment of it all. And it could be, bank policy changing, whether it's for for a positive or a negative impact. Bank policy is changing rapidly. It's a very fluid environment at the moment. We're seeing things change daily, essentially. So it's just good to really be on top of your approval if you've got one, or obviously if you're going to think about buying a property this side of Christmas, getting in touch with the broker and getting something in place. So you're good to go if you see the property, and things obviously, as Dan, as you know, good properties move quickly, so it's good to have the finance out of the way and you don't have to worry about it. But I guess the only other thing I'd recommend is generally just cleaning up your accounts. Like if you're about to go and lodge an application with the bank, they're very thorough. So a lot of lenders are asking for 3 months bank statements for the account that you're paid into. They're asking for 3 months statements for your credit cards. If you're not in a rush to buy a property, but you're thinking about doing it in the near future, have a good look at your living expenses, have a good look at what you're spending, and just see if maybe you should be tightening things up in preparation for lodging a home loan application, or even just taking out a home loan. Obviously, it's a large liability. You're going to be taking on. You want to make sure you meet your requirements, not overstretch yourself, and just have a look at generally what are you spending, because the banks are certainly having a very good look at it now.
So a good broker reassessing your current pre-approval or mortgage, and making sure your bank statements are nice and clean and tidy to streamline your lifestyle.
Yeah, exactly. And you're just reassessing existing loan facilities as well. There's no better time probably if you've got an existing home loan to look at a refinance, see if your existing bank will sharpen the pencil. Might not necessarily mean changing banks, but just reaching out and asking for a bigger discount. Some lenders are doing up to $4,000 cashback refinance incentives. So you may find you make a little bit of money by switching banks, plus the interest saving if you're getting a much better rate moving forward. So that's probably another thing worth considering.
And in relation to business, how are you seeing things differently
now? I guess one of the things is obviously turnaround times. It's something we really have to manage. With client expectation. Maybe they bank with Westpac forever and they just want to stick with Westpac, but they have to understand that they're not going to be in a position to execute on a purchase for 4 weeks, because that might be how long it takes to get an approval. That's obviously something that we can come in and help them recognise. Initially, maybe they only need some sort of indicative approval from a lender so they're confident to proceed on a property. We can go back to the Westpac once we've signed the contract. Let's get the approval, with a bank possibly that's a little bit faster to issue something. We're a little bit different, I guess, in the sense that we have good access to sort of private bank relationships. A lot of the time, it's probably not as much as the old days in terms of character-based lending, but a lot of the time there are certain policies that we can get exceptions on by going through private bank channels. Your average, I guess, client looking at buying and borrowing on a house in the eastern suburbs, we're talking larger loan amounts, larger purchase prices. So sometimes we can take advantage of certain, I guess, credit exceptions by going through the private channels. I guess the other thing we're really different with a lot of brokerages and I guess dealing directly with a bank is the reassessment we do at the time of purchase. As we said, we may get a pre-approval with one bank but settle with another, and it's just part of our service. We do it so that we get the best result for the client in the end. It's a lot of extra work for us to reassess all the options once they've actually found the property and signed the contract. But we know if we do that, they'll get the best result and be really happy with the service, which is obviously what we want. I think a lot of brokers and obviously dealing directly with a bank, you kind of pigeonholed into sticking with the lender you got your approval with initially, because there's a lot of extra work for the broker to go through to make sure you are getting the best deal. And if your broker's not checking the options at the time of purchase, then they're probably not doing their job properly. Again, availability, we're probably a little bit different in the sense that the hours we keep are quite long. And we work pretty hard, but just market knowledge and structuring advice. We spend all day talking about property tax with clients. We end up, obviously reverting them back to their accountants and that sort of thing. But having someone that really knows how to structure your loans appropriately is very, very useful and very valuable. And just market knowledge around where rates might be heading, if we're looking at, say, variable versus fixed and that sort of thing. So, yeah, there are probably a few areas where, we can assist maybe more so than another firm or another brokerage. Obviously, as I said initially, the volume of lending that we actually do has a really positive impact on our turnaround times and interest rates we can achieve for clients, and it's probably a big part of why we've grown the way we've grown and built such a good business.
Fantastic, mate. Well, thank you so much, and I can testify you're the most proactive mortgage broker I've ever come across, and certainly got people organised within 24 hours to bid at one of my auctions on a Saturday. So there is no one better in the industry. Charlie, thank you so much for speaking.
Good to chat. Cheers, Dan.
Thanks, mate. Take care.